Good morning, Monday, and hello, world. We're going to be jumping into our daily interest rate and finishing off our 15 top mortgage questions asked, so don't go anywhere.
You were talking about money, Mark.
Separate yourself widely from the pack moving forward. That's something that you would be willing to have a discussion about.
Because they didn't get it.
They
were
probably
like,
didn't
right.
get it. Yeah.
So follow.
Hey guys, welcome back to Millennial Market Talk, and this is your daily Millennial Mortgage Update. I'm Mark Jones, branch manager of Directions Home Loan here at Cantera in San Antonio, host of Key Factors podcast, and co-founder of ReviewMyMortgage.com, the largest index of mortgage programs nationally. And we'll jump straight into our interest rate for the day. As always, disclaimer, this is an average interest rate based on your territory, compiled through Google and the analytics that they do. I'm going to go with a $300,000, which is the average home price in San Antonio at the moment. 20% down in Texas with a credit score of 700 to 719 on a 30-year fixed mortgage, averaging at about a 4.255%. Average credit score in San Antonio is 676 still today. At a 30-year fixed mortgage, we're sitting at 4.58%. And tune into our episode on Key Factors podcast, where I interview Dylan Shively from the James Warren Group, and he educates us on how to raise your credit score. There's a lot of myths that get busted in that episode. The episode is entitled, "Good Credit is Cool, but Great Credit is Sexy." All right, so that was your daily interest rate. Let's jump into our article of the day, and we are doing a continuation from Friday with the Friends. We were going over a Dave Ramsey article entitled Top 15 Questions Answered, and we were going through them and essentially re-answering the questions from a mortgage lender's perspective, because this article was not written by a mortgage professional. We actually mentioned that in the episode from the day before. So, continuing with number 7, how do interest rates affect your mortgage? High interest rates bring higher monthly payments and increase the overall interest you'll pay over the life of the loan. A low interest rate saves you money in both the short and the long term. Of course, just like you can't time the stock market, it's nearly impossible to time your home purchase with the best interest rates. The past 5 years have held some of the most affordable interest rates ever, according to the Federal Home Loan Mortgage Corporation, and their recent forecast predicts that trends will continue. It goes on to say the money you pay in interest doesn't ever go towards paying off the principal balance of your home. That's why it's smart to pay off your home as quickly as you can. That one I actually agree with. It talks in the middle there about utilizing a 15-year mortgage, which absolutely is a great way to cut the interest in half. But one thing I do want to recommend to folks is that interest is charged on the balance that is left. So therefore, you can set your mortgage up on a 30-year mortgage and pay it as if you have a 15-year. All the additional deposits that you make towards the property will go towards the principal of the mortgage, which in turn chops down the amount of interest that you pay over time. This basically cuts off years, which essentially if you're cutting off years from your mortgage, you're saving interest overall. So don't feel like you have to jump straight into a 15-year mortgage, and if that payment is too high, you can't buy the house. So moving on to number 8. Here we go. 8. How do you lock in your interest rate? Because mortgage interest rates can change day to day, locking in your rate is an important part of the mortgage process. Locking in your interest rate guarantees a certain interest rate for a specific period of time, usually between 30 to 60 days. In most cases, you can lock in your interest rate as soon as your initial loan app is approved. However, most buyers wait until they've found a specific home to purchase and are officially under contract. I'm going to stop right there. I don't know any mortgage companies that allow you to lock in an interest rate without a property, without being under contract. And the reason for that is everybody would be doing it. Essentially, we know that rates are on a rise, and that would allow you to capture an interest rate and lock it in for a 60-day period. So what happens if you don't find a property within those 60 days? You're going to be charged extensions. You are going to have to cancel the lock and then wait another 31 days in order to relock. And if there are folks out there that are allowing you to lock in your rate prior to, then there's a hefty fee that's associated because it's a big risk that the actual lender's taking in reserving those funds at that specific interest rate being tied up and not actually closing or foreseeable closing on that. So just keep that in mind. Again, this is not written by a mortgage professional, so I don't think that they understand the idea of locking in an interest rate having to be done once you're actually under contract or on a refinance, which those are going away very soon. Number 9. What are mortgage points? Mortgage points or discount points are a way to prepay interest to get a lower interest rate on your mortgage. Each mortgage point equals 1% of your home's value. In most cases, a point can reduce your interest rate by 1/8 to 1/4%. That's pretty accurate. We don't recommend discount points because how long it takes to break even on the cost. In most cases, you'll sell your home or could even pay it off before you recoup the money you paid up front in order to get those points. So I do agree with this as well. I mean, I am not a strong believer in buying down discount points. That happens quite often when we as consumers get brainwashed by all of the marketing and things of that nature that you see on social media and TV, talking about interest rates. And if you're out there shopping for interest rates at the moment, you'll notice that you'll see low rates, probably still in the 3s. And then when you actually speak to them, they'll say, yes, that rate is with 1 to 2 to 3 discount points associated with it, and you necessarily weren't prepared to do so. So that's important when you're looking and shopping at interest rates, is to ask what the cost associated with the quoted rate each time. You want to find out what the at par rate is or not undiscounted rate, and then you can go from there. But most of the time, you'll want to calculate your break-even point. And I'll have a specific daily episode about breaking even. So moving on to number 10. Number 10, what does your mortgage payment include? Well, this one's simple. Principal, interest, taxes, insurance. That's it. All the association dues, all of the third-party things are not associated with your mortgage payment. And in some cases, if you put down 20% in equity, you're able to waive your escrows. So the principal, interest, taxes, and insurance, the last two there, taxes and insurance, will essentially be paid out from your own account and not be collected by the mortgage company or the servicer. In my opinion, this is a great thing, especially if you are putting down 20%, because over the course of 12 months, the mortgage servicer is taking all these funds, putting them in a large piggy bank, and essentially making money off of your money. Don't let that happen if you don't have to. Also, if you are putting down less than 20%, in some cases, you'll have a monthly mortgage insurance associated and included in your mortgage payment. There are also other options available to get rid of mortgage insurance, such as lender-paid mortgage insurance, upfront mortgage insurance with less than 20% down. So get with your lender, and if they don't know how to provide you with those types of options, give us a holler at lockandterraloans.com. One of our loan officers will definitely guide you on the options when it comes to getting rid of mortgage insurance with less than 20% down. So number 11, what is an escrow account and how does it work? Your mortgage payment may include additional costs like your homeowner's insurance and property taxes. This is kind of what I was just talking about a moment ago. By putting less than 20% down, it does not allow you to do this. And I actually can bust that myth as well. You can utilize a second lien to simulate 20%. You'll have a first lien, second lien, and then your down payment. Number 12, when should I consider refinancing? Let's see here. It says you should definitely think about refinancing if you can lower your interest rate enough to justify the closing cost. You can refinance from adjustable rate mortgage to a fixed mortgage. It's possibly worth it to refinance if you could lower your interest rate by 0.5%. It goes into detail on a little bit more of this stuff, but in my opinion, when is a good time to refinance? Let's talk about things outside of rate. If you are looking to pull equity out to pay off other debt, if you're looking to pull equity out to leverage over and purchase investment properties, if you're unfortunately going through a divorce, there may be provisions within the divorce decree that require you to get one or the other name out of the actual mortgage so that the liability is not counting against the ex-spouse. The next important thing is essentially making sure that you know how to calculate your break-even point. Number 14, how long does it take to close on a house? The average time to close on a house currently is around 40 days. Factors such as your loan type, your financial situation, and the length of your contract can either lengthen or shorten this time frame. As of right now, guys, we are used to closing loans here in my branch at Directions Home Loan at Cantera within, I would say, 30 to 45 days, and that is amidst the pandemic. Keep in mind that refinances do not take the priority over purchases at any mortgage company. I would imagine that we're all kind of on the same page with that, but it's important for everyone to set expectations properly. There's a lot of lenders out there that you will find that are looking to capture more business, and I'm just going to say it, they're not very honest and forthcoming about the expectations. So in those scenarios, you'll have to request what's considered an amendment to the contract to extend the closing date. It's not good for anybody in the transaction, especially if you're finding these things out last minute. No one wants to be surprised with the fact that they may or may not be closing and they don't know when the closing is going to take place. For those mortgage lenders out there that are still doing this, guys, get it together. There is nothing wrong with setting the right expectations. People have lives. Matter of fact, not everybody associated with the contract wants to close as soon as possible. What I'm seeing a lot of these days is leasebacks, but yet we've got buyers on one side wanting to close super fast. I'm not sure if in all cases it's always the buyer or the realtor that want to close as soon as possible. But if we plan accordingly, I believe that everything should work out smoothly. So if it's going to take you 35 days to close a loan, make sure you tell them 40. So you give yourself a little bit of leeway. It's important for us lenders to underpromise and overdeliver. That's how you obtain more business. Let's move on to number 15. What happens at closing? When you close on your new home and the mortgage is officially yours, at the closing, you'll sit down with the professionals involved in your real estate transaction and sign all the legal documents needed to give you home ownership of your new place. It's pretty exciting. You'll also be responsible for paying the closing cost as part of the closing process. Closing costs are typically 3 to 4% of your home's purchase price. You'll receive a closing disclosure 3 days before closing. The CD is also known as the closing disclosure, or abbreviation for it, but this document is sent out at least 3 days prior to the actual closing to allow the borrower to review all of the closing documents prior to. That way, if they have any questions, you make sure to provide those responses to them. Pro tip for you guys out there listening. One thing that we actually utilize to help and make this process much simpler for our loan officers and the borrowers is we use a product called Loom. It's a tech tool. Loom allows you to capture your screen with a cool little bubble, kind of like we're doing here, which allows you to go over what you see on the screen and send it out via text message. In my opinion, this has saved us tremendous amount of time from the back and forth of a customer calling after they received their closing disclosure and maybe it wasn't accurate at the time. But if you're being proactive and getting ahead of this, not only does the customer have a great experience, but they'll also understand the closing disclosure and what they're about to go through and close on, given all the figures and explained by you, the loan officer. So that concludes 15 top questions asked in the mortgage business by consumers. And I can't say that Dave Ramsey's article here was too far off. There were a couple of things that I disagree with, just being in the mortgage business, but there were quite a bit that he got right on the money. So if you got something out of this, guys, definitely plenty in here for you guys to take back and hopefully utilize as you go through the mortgage process, or if you're a lender, to utilize with your customers, better understanding, and realtors as well. So if you got something from this, please help us in getting the good word out. Make sure to share with a friend. You never know who could use this advice and this daily Millennial Mortgage update. And if you missed the first 6 questions, jump back on our YouTube video to our Friday with a friend. With Jody Trevino and myself, we went over and gave our opinion on the first 6 items or first 6 questions in here. And also, guys, we are growing this thing through osmosis. It's mostly catering to the Texas region. Subscribe. So this is your Monday morning reminder that you can handle whatever this week throws at you. And I'm Mark Jones, your Millennial Mortgage expert. And this was the daily Millennial Mortgage update. You guys make today count.
You were talking about money market.
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't
right.
get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?